Wamsi, thank you for being here. So the cyclical nature of the challenges, first, can you just outline what those challenges really are, and how long you see that the cyclicality of those challenges playing out?
Yeah, absolutely, Leslie. So I think when you look at the portfolio, the areas that are cyclical on the product side, clearly you have Macs and iPads that are constrained, but they went through a huge boom cycle during COVID. So we think that those two have some cyclical exposure. I think iPhone, by and large, has proven to be a very stable platform in general. So not really seeing the boom bust that you see in cyclicality historically. I think the install base has grown to such a degree that the iPhone sales are much more resilient now. And then when you look on the services side, App Store has some cyclicality to it. Obviously, the ad payment that they get from Google, that has a lot of cyclicality. That's really what's pressuring the services side of the business. So we think that ad spending is something that is going to be transitorily weak. That is going to be the cyclical headwind in the near term. And then you have FX. So those are some of the things that are going to pressure on the near term. But none of these are structural per se. You still have a lot of room for growth in each of these categories.
A few weeks ago, there was a report that indicated Apple would be slowing hiring amid some of the macroeconomic headwinds that they're facing. That spooked Apple investors at the time. It brought down the broader market as well, just indicative of this fact that Apple is seen as this almost safe haven in recent downturns, and the fact that they were looking at potentially slowing hiring. What does that say about the rest of the economy? Do you have any indication from these earnings that Apple is really in a position that it's struggling right now, or do you think that the market kind of overread some of the concerning signs from that report?
Yeah, that's a good question. Look, I think that when you look at Apple and what history has shown us is really that Apple spends at a really increasing cadence through every downturn and every cycle, because they're looking at products that are launching 3, 4, 5 years from today, right? You got investments in AR, VR that they're going to continue to make. Doesn't matter whether the economy is softening for 2 quarters or not. They're going to make investments in the car. So you just have some of these long-term projects for which you're going to have to hire people, and you just saw a high-profile hire for the car project. It's just that Apple has the ability to withstand sort of near-term volatility. And I think that while the company is going to be cautious about its OPEX, and we've seen them manage OPEX in extreme situations, right? Like in March of 2020 when we went through COVID, that's the point in time when they said, okay, we're going to be responsible and manage our OPEX appropriately. But in terms of investing for growth, that I think is not going to stop. So I think it's a little bit overrated in terms of them pulling back on hiring. I actually think that they're going to continue to really invest in areas that are critical, and maybe on the margin just slow down a tad bit if they need to, absolutely, if the economy goes into a nosedive.
Wamsi, we've watched how you've, over time, I would argue last year or two, gotten incrementally more constructive on Apple. Do you think this quarter sort of ratified that view? And when you talk about areas that are critical in investing, what's critical right now? How important is anything, a DirecTV or Sunday Ticket or something else?
Yeah, I think that, Carl, thanks. Look, I think when you look at Apple over time, right, we like to try to manage expectations and ratings based on what we think, if there's a capability for Apple to outperform, given the broader macro conditions, given positioning. And we think we're at a unique point in time where we know that the macro economy is decelerating, but you have a lot of faith in where Apple can sort of deliver on earnings. I mean, if $6 in earnings is realistic, that's a lot more you can say about Apple's certainty in earnings relative to a whole bunch of other companies. And so I think it is still a safe haven. I think that if you look at relative performance, it has outperformed. And when you look forward, product cycles are defining moments for the company, right? Especially when you launch completely new categories like AR, VR. Those are times when you can see the multiple expand. In the near term, we are a little concerned that services is very important. It is actually going to decelerate under 10%. A lot of that is FX. So I think, again, like it's a cyclical transitory thing, but we are focused on where the gross margins are going. Cyclically, we think they're headed a little bit lower, but structurally, I think longer term, they're headed higher. So there are lots of puts and takes, lots of cross currents, but we still think that the stock is going to do extremely well over the long run.
Shepard Smith here. Thanks for watching CNBC on YouTube.